Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we're now on August 28th, 2019, just approaching about 3:25 in the afternoon. That's p.m. Central Daylight Time. This will be the settlement prices in all the stock indices. So the market had a good, strong day, finished off in the second part quite nice. Gold market, silver market, well, gold down a little bit at the end, but from what I saw, it closed a little higher than this. Silver very close to these ranges. The dollar was strong at the expense of a number of currencies today, and we also had a stronger mix in the energy markets from a number of reasons. The storms coming in, you heard about Hurricane Dorian. It'll be a Category 3 coming on board. I don't know what it'll do to the nat gas, but it probably tagged along with everything. But the other markets were up because the EIA and the API came into agreement of large net draws in both the oil and the products. So that was good. Bonds and notes ending up the day with a good, strong bid. So as we look at the S&P on the weekly chart and just on a closing basis, the bias remains down because you're still under the 18-week average is 29,1450, and you're from there, neighborhood about 25 points away, certainly within striking distance at any time. When we look at the chart action, you can see how the market is consolidated all through here. So we had a break that carried, bounced, and never went back to those lows, just sort of hanging right here at this point. In the swing line, today's setup's quite interesting. You've got lower highs, lower lows, which is bearish. However, when you put on the moving average, you can see you rallied right back to that 18-day average of closes, and yesterday's break to the 200-day has been the second successive second successful test, is what I want to say, of the 200-day average, carrying back to the 18-day average in due time. So that's interesting in the sense that it's telling you the market doesn't have the staying power to the downside. Should this market get over 28.9950 tomorrow, that would negate the downtrend and throw the market back into a pattern, at least at that moment, of higher lows and higher highs, putting into play the 29.15 number. Isn't that amazing? It comes right back here as the 100-day average for the resistance point. When we take a look at Bollinger Bands, you tested both the Bollinger Band and the 200-day moving average 2 days ago, back up to the 18 today, and momentum no longer pointing down, flattened out. Now you do realize the volume is going to shrink, your stock market volume's already way down, and this market can be pushed around rather easily by the algo traders without other people participating a lot. In the NASDAQ, 2 days ago, we challenged the 200-day average right back to the 18 and hanging there. Similar to the S&P, if this market takes out this high, in fact, yesterday's high, and I wrote that in my newsletter today, if it took out 76.4850, you can negate this whole downtrend and put the market back into possibly an uptrend if you can stay over that 18-day average of closes after you do that. Momentum here also flattened out. In the Dow, notice how this market came roaring back, and at the end of the day, at a close of 26,037, it's over the 18-day. None of them took out Tuesday's highs. So Tuesday's highs have yet to be taken out. All of these that have corrected have seen their downside momentum flatten out. We've had successful tests on these three markets of either Bollinger Bands or 200-day average of closes, and in the case of the Russell, it's been the 200-day. It's still acting the weakest of the group. It's flattening out its momentum at a lower level, and it would have to get over yesterday's high, which was 1487.70, and that still is going to be under, from the looks of it, the 18-day average of closes. So the 18-day average of closes has to be settled over, and Tuesday's highs are probably the key to negate the current spat of selling in the market and put the charts onto more of a bullish stance. In the VIX, take out this number, which is 1849, and you negate the uptrend. It's still in an uptrend, however. Fell back, and you can see right against that 18-day average of closes. This cannot turn into a bear pattern because it made a higher high than 2133 today with 2155 as the high. Even if it took out 1849, you'd have a higher high, lower low pattern. In the bond market, we're into a resistance area in December bonds. I've left the SEP now and I've moved to the Indices. Market is overbought into a resistance zone in an uptrend. The same is true of the December 10-year notes, right up to that Bollinger Band, resistance zone, overbought condition while in an uptrend. In TLT, we have a lower low, higher high pattern, overbought, trying to reach up to the upper Bollinger Band, but I would assume that's going to be where a resistance point shows up. In the dollar index, I don't see a trend. I see a higher high, lower low. I certainly see a market that has developed sideways action through all this, and I see a market that each time it hits the Bollinger Band, it pays attention to it one way or the other, be it to the upside or downside. Doesn't seem to get a lot of carry one way or the other. In the eurocurrency market, it's looking more and more as though Italy will have a government possibly formed even tomorrow. It appears that Mr. Conte is going to be taken back as the prime minister. Mr. Salvini, it looks as though he's going to the sidelines, and we will see if Mr. Conte can put together and form a coalition government, but it's looking that way. As for the Brits, Boris Johnson called an end to Parliament, which he has the absolute right to. It's been a 2-year session because of Brexit. He can do that, and then when the Queen's address comes back, I think it's October 14th, they can resume. So they get in for a window, I think September 3rd, for a week or so. During that time, you can count on it. There's going to be calls for a vote of no confidence. If that comes through like it did with Miss May, it could throw things in an uproar. Should Mr. Johnson win that vote, it gets very interesting because English politics are so different. I won't go into it here. I do it in my newsletter on a regular basis. Suffice to say, we have resistance in the euro all the way back at the 18-day average. You are in an oversold condition where you haven't taken out recent lows. British pound. We talked just yesterday that the market was having trouble at that upper Bollinger Band as I expected it would, and if it broke, maybe support back at the 18-day average. You tell me what happened today. You've lost your upside momentum. This market, I think, is now holiday prone to just hang around there. In the Japanese yen, we had a couple of bounces back up to the upper Bollinger Band, and now you're right back under the 18-day average. So I've got a lower low, higher high pattern. I don't see a trend in this at all. In Bitcoin, I still see the market in a downtrend, which it's been in for a bit here. Or has it? If we take a look, we could argue it had higher lows and lower highs. Today, it confirmed a downtrend, but in confirming it, it's instantly oversold. I wouldn't put a lot of weight on it. 93.45 could be a potential support zone. In the Brent versus WTI crude, I've moved to the Novembers for both contracts. So this is brand new, and you can see how you're under that 18-day average of closes. So we had a bounce from roughly 350 up to 475, and here we're starting to break back to the 420 difference between the two. I basically see sideways action in the November Brent. The pattern is one of a higher low and higher high. The trend is up right now. Resistance, 60.97, support back at the 18-day average, 58.75. WTI crude is not in that pattern. The October's got lower highs, lower lows, which is negated because prices have been over the 18-day average. Again, I see more sideways action than anything. In October gasoline, the move today to 158.00 did not take out 158.34. You still are left with the lower low, higher high. I'm going to call it stuck in these two Bollinger Bands, just sort of drifting going into the to the Labor Day holiday. We saw that the EIA report today saw a good drawdown in gasoline and crude, but I wonder how much of that is pre-Labor Day as you set up the gas stations all through America for this last big driving holiday. That doesn't mean driving completely falls off in September, but it certainly starts drifting way down from what it was during the summer months. As for resistance in the nat gas, you're right there. I think the pros are getting out today. We'll see if the storm does anything for this Hurricane Dorian, which is going to be a Category 3 as it comes on land, but I don't know what that's going to have to do with the market one way or the other. I write about this and a lot more. In fact, I've already written tonight's newsletter, so I pretty well know what it's going to say. But with my research, what we offer our clientele is they get our free, and it's $40 a month without it, having my advice, our commentary, our Android or Apple iPhone app that you can keep up with charts, quotes, news, my updates come through them, things of that nature for you. This is what a typical written update looks like. It's not pages, believe me, it's a page. And I really condense it so that you get information about what to expect tomorrow in government reports, and they can be anywhere in the world that I think is important. Then I bring you up to date with what the markets look like, the focus as to where I want to have you draw your attention for that evening or in the morning. I put out these updates twice a day, once at 11:30 in the morning, another before 8 p.m. As I said, they come to you via email, and they're also in our different charting applications, including our mobile application. Normally it's $60 a month. If you haven't tried it, I'll give you a free trial to that. Simply give us a call or go to our website. You'll see free trials. Sign up for it there. You can sign up by clicking here. It'll take you right to that page as well if you're watching me on YouTube. I'm Ira Epstein. You have a great evening. I'm looking forward to the Labor Day to chill out again. I will talk to you all tomorrow.